Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. Thank you so much for joining. We're excited today to discuss the top benefits of a solo 401k reverse IRA rollover. Those top benefits specifically for self-employed solopreneurs. If you're checking us out on YouTube or Instagram, or LinkedIn or X, please like this video as it helps us to get the word out to other self-employed individuals just like you. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor is a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. If you have questions or topics that you want to discuss, whether on this topic or even off-topic issues, please chat them over as we love to discuss questions or topics. Please don't be shy. So let's dive in and let's first break down what a reverse rollover is. So typically when someone processes a rollover, they're transferring money from an IRA to a 401k, such as a solo 401k. Now, typically when they're processing a rollover, they're transferring from a 401k to an IRA. A reverse rollover is the opposite. That's where you transfer the money from an IRA back to a 401k or to another employer plan. So the question is whether you're eligible to do it. So you both have to have a plan like our plan that allows for funds to be rolled over to the solo 401k. And you also have to have funds that are eligible to be rolled over to a solo 401k. So in the context of an IRA, that's going to be pre-tax money only. In other words, one cannot roll over after-tax money in an IRA. That could be non-deductible after-tax money, or it could be money that's in a Roth IRA. So the only type of money you can roll over is pre-tax money in an IRA. So if you want to process a reverse rollover, which is where you roll money from an IRA to the solo 401k, you've got to have pre-tax IRA money, and you have to have a solo 401k plan like ours that allows for rollover contributions. Now, why would one want to do a reverse IRA rollover? In other words, what are the benefits of rolling IRA money to your solo 401k? Well, there could be several. There are potentially several. So let's break those down. So number one on our list would be facilitating a backdoor Roth IRA conversion. So let's first understand what a backdoor Roth IRA conversion is. And this is something that is different than a mega backdoor Roth solo 401k contribution, which is very popular with our solo 401k clients. A backdoor Roth IRA conversion would apply to someone who makes too much money to make a Roth IRA contribution. Because under the rules, if your income is too high, you're not going to be eligible to make a Roth IRA contribution. And so essentially the workaround is making a backdoor Roth IRA contribution. And what that entails is first making a non-deductible contribution to an IRA, non-deductible because you make too much money. So you're making that contribution on an after-tax basis, not able to make a Roth IRA contribution directly, but you can still make what's called a non-deductible contribution. So now you have after-tax money in your IRA. The challenge with the backdoor Roth IRA conversion is the pro rata rules. So under those pro rata rules, all of the money in all of your IRA accounts is aggregated. So that means that so the second step in the process is you have to move the non-deductible money to a Roth IRA. And the problem is under those pro rata rules, you have to look at all the different IRA accounts that you have. And so if you have some pre-tax money in your IRA, that's aggregated with the after-tax non-deductible contribution that you just made in determining how much or what type of funds are being transferred to the Roth IRA. So if you have, for example, $6,000 of pre-tax money in any IRA, and then you make a $6,000 non-deductible contribution to an IRA, and then you transfer $6,000 to a Roth IRA as part of a backdoor Roth IRA conversion, half of that money is going to be taxable because the IRS rules wouldn't allow you to just transfer the non-deductible money to the Roth IRA. They're going to say, well, you're transferring a pro rata amount of the pre-tax money that's maybe in another IRA, as well as the non-deductible money that you just contributed to an IRA. So that means that you'll actually have to pay taxes on half of that, right? The pro rata portion. So how does transferring money from an IRA to a solo 401k help? Well, it essentially allows you to clear out all that pre-tax money so that when you make that non-deductible contribution to an IRA, you're not practically impacted by those pro rata rules. So you can just at that point transfer the non-deductible money to your Roth IRA. So by processing a reverse rollover to the solo 401k, in other words, moving the pre-tax money that's in your IRA to the pre-tax solo 401k account, you've essentially isolated that money. Now you only have non-deductible money that you then contribute to the IRA, and then you can just move over the non-deductible money to the Roth IRA as part of that backdoor Roth IRA conversion. So that would be the first top benefit of processing a solo 401k reverse IRA rollover. So what are some of the considerations? Well, tax implications, right? That's where we talked about the pro rata rules. You want to just make sure you work with a professional that can help guide you through those rules because they can be complex. Just make sure you understand what you have, right? Distinguish between pre-tax and after-tax money that's in your IRA. Just make sure you've got accurate record keeping, right? Showing that at the time that you made that non-deductible contribution, there was no other money in any of your IRAs, et cetera, et cetera. So now let's move on to another benefit of processing a reverse IRA rollover to a solo 401k. And this really highlights the difference between IRAs and solo 401ks. So, and that specifically is the ability to access solo 401k loans. So with the solo 401k loan, you can withdraw money from your solo 401k, and it's not going to be subject to taxes or penalties. So it's an exception to the typical distribution rules where if you take money out of your solo 401k, you're going to have to pay taxes and possibly penalties. So with an IRA, one is not allowed to borrow from an IRA. IRA accounts do not allow for loans. But if you have a solo 401k plan, like our solo 401k plan, it does allow for loans. Now, when you withdraw the money, of course, it has to be documented as a loan, and it's got to be paid back according to the loan terms in order to reap the benefits. In other words, in order to avoid paying taxes and penalties. Now, we handle the loan documentation requirements as part of our service for no additional charge. It's an optional free service for our customers. As far as the terms, you need to limit the loan to 50% of your solo 401k account balance, not to exceed $50,000. And you need to pay back the loan according to the terms. It needs to be paid back in either monthly or quarterly payments, equal payments of principal and interest. The interest is either prime plus 1%, or it could be a CD rate plus 2%, with those payments spread over a 5-year term. Now let's go to the third top benefit we want to discuss today in terms of why someone would want to consider a reverse IRA rollover to a solo 401k. In other words, why someone might want to roll over IRA money to a solo 401k. And that's the ability to access alternative investments. So now there's a range of solo 401k options out there. Some are very vanilla, right? For example, they only allow you to invest in a narrow range of investments. Whereas our plan allows you to invest in a wide range of investments. In other words, if it's allowed under the rules, it's allowed under our plan. Now, likewise with IRA accounts, many are going to be limited to a relatively narrow range of investments, even though the IRA rules might allow you to invest in real estate or crypto or notes or private equity, etc. The IRA account that you have may be limited to just stocks, equities, in other words, mutual funds, etc. Now, if one rolls over their pre-tax money in their IRA to their solo 401k, and it's a solo 401k plan like our plan, they're now going to have access to alternative investments, true alternative investments like real estate, private equity, notes, cryptocurrency, precious metals, etc. So that would be the third benefit of the solo 401k reverse IRA rollover. So the next steps, of course, would be to just review your IRA, your solo 401k, of course, discuss with your financial, tax, legal advisors, etc. If you want to learn more, please feel free to contact us at business@mysolo401k.net. We also invite you to our community, over 30,000 members. It's a vibrant community. We have forums. We have a library of videos and webinars. Again, if you're finding this video to be helpful, please like this video. It helps us to get the word out to other solopreneurs like you. Please subscribe as well, as we host daily webinars. So you're always welcome. It's always free to join the community as well. It's mysolo401k.net/my community. So we'll give it a minute here to see if any questions trickle in. But thank you again so much for checking out today's video. We certainly appreciate it. Hopefully it was a helpful topic. All right. Well, we're not seeing any questions come in for now. So until next time, all the best, everyone. Take care.